at VMware. You invented one of their hit product, and I will let you talk about your I will let you talk about your like track record and like career before you started engineering capital. Oh,
Sure, I'm always happy to talk about myself. I grew up in India, in a village on a farm, came here to study like so many Indian students, ended up at Stanford eventually for graduate school. At VMware, I was director of product management. I do need to correct something. I was not the inventor of ESX Server, which is their main product, but I was running product management for them. And I wish I was the inventor. I wasn't, but it was a very interesting product, and we broke really new ground in terms of pushing the edges of what people thought was technically possible at that time, and obviously ended up building a massive company. Most people believed that virtualization is not possible. They thought it is literally impossible, as in they had published papers saying this can never be done. And there we were, thanks to the good work of people like Mendel, Ed, Diane, etc. We created a whole new category.
mm. I wonder what are things that you've taken like so one of your I guess like we were talking about like technical insights, right? Technical insights is extremely important, and like how do you think like technical insight applied in your when at the time that you were working at VMware, and what were some kind of like things that you've learned throughout this journey that you've took to apply into investing today?
Yeah, technical insights has been a theme throughout my entire career. So I'm obviously an engineer. I run engineering capital. I call myself venture capital for engineers. And technical insights, this is how I define them. If you tell a good engineer what you're doing, they will not know how you are doing it. So you can think of extreme technical insights as, brand new inventions. The most amazing insights can lead to like a Nobel Prize or a Turing Award or, some amazing accomplishment like that. But it doesn't really have to be that special to be a technical insight. But it is also not something that is trivial. In other words, that an ordinary engineer who was good, who understood the technology, but didn't know what you were doing would be able to solve.
Mm,
And I gave the example of VMware. The x86 chip has been around obviously for decades. The architecture is well established. Everyone understands it. Millions of them have been sold. And people have studied their architecture for many, many years, including Professor Popek and Goldberg, UCLA, very well-known professors who had published a paper saying that the x86 can never be virtualized. The technical insight there really was to pair what is called a binary translator. We don't have to go into the technology and how they do it. That gets a little bit technical and arcane. And frankly, it's a little out of date now. It's been 20 years since that work was done. But the idea of pairing a binary translator to build a hypervisor to virtualize, the x86 was the technical insight. That was the aha moment that folks had, and they built a great product. I was very proud to be part of the team and help lead, the product management effort over there. And obviously, it became a multi-billion-dollar business because if you can connect a technical insight to a real business problem, if you can solve a business problem with a technical insight, then you have an unfair advantage. And that is really the magic of Silicon Valley, of how great companies are built. And if you want me to go a little bit deeper on technical insights, I can also compare Google and Facebook in terms of how they are different. Even though they both have great technology, they have great engineers, in terms of how they are different on how they started based on technical insights.
please go ahead.
So everybody's familiar with Google and Facebook. Obviously, both companies are extremely successful. They're more than 20 years old. Google was started on a technical insight itself. So
Mm,
Larry and Sergey, they are students at Stanford. They are thinking about how do you index web pages, and they come up with this observation that if instead of indexing it based on the content of the web page, which is
mm,
how web pages were always indexed, why don't we index it based on who is linking to that web page?
mm,
Wow, that sounds great. If the New York Times has a link to my page, or if Wikipedia has a link to my page, it's probably more important than if some no-name blog has a link to my page.
mm,
But that's a very hard technical problem.
Mm,
To do it at scale, in other words, when you have millions and billions of pages, is extremely slow. And
mhm,
so their magic was coming up with PageRank, this algorithm which could do it a little bit faster. Instead of
mhm,
being an n squared problem, they made it into an n log n problem. And then of course they added a great advertising model, they built a great business, and now it's $1 trillion company.
mhm,
Facebook, on the other hand, was started based on a consumer insight. What Mark Zuckerberg figured out before anyone else is that we like to be liked, and we are
mhm,
willing to trade our privacy in exchange to be liked.
mm,
And so that was a consumer insight. It was a human behavioral insight. It was not a technical insight. And then, of course, he also built great technology. He also built a great advertising model and built a great, social networking platform on it. And again, I'm not saying that Facebook doesn't have good technology. They clearly have great technology, but the start and the foundation of the company was not a technical insight. So it's not essential or it's not required that you have a technical insight. But if you have one, you get an unfair advantage. You can end up with sort of a monopolistic company like Google became. And the core of Facebook was not that. Now they have a network effect, which also gives them monopoly type characteristics. That's a different part of the business. But the starting of the company was a human insight. It was a behavioral insight that Mark Zuckerberg had.
mm. How, I guess, I have a couple questions there about technical insight. Can non-technical people find technical insight? And like how, like, since like, a lot of our listeners are technical, of course, but like, after all, like in the venture ecosystem or in tech in general, there are a lot of people who are non-technical. How could they tap into, like, I guess, like, how could they help with developing a product with technical insight? And can you compare like a product that with technical insight that execute well versus someone have found a technical insight, but the company itself did not go well? Why that happens?
Those are two excellent questions. To take the second one first, there are many companies that had great technical insights that didn't succeed. So, absolutely, it happens all the time. And we can certainly take examples of that. But let's come back to your first question in terms of, do you have to be a technical person? How do you come up with these technical insights? Where do they come from? I think it depends on how you define, are you technical?
Mm,
So let's take the example of Bill Gates. Bill Gates dropped out of Harvard very early on, started Microsoft, and obviously became, built a very successful company. Or you could even take Steve Jobs. In fact, in this aspect, they are very similar, very different people, in other words,
mhm.
in other ways. Would you think of Bill Gates as a technical person or not a technical person?
um Honestly, I define him probably a non-technical, as anything after that, it's gonna be majorly business. I don't know. I mean, I don't know him personally. You
Yeah.
tell me.
So that's so exactly. I mean, you're struggling with that question because it becomes difficult to say, is he really a technical person or not? Because he didn't go to school, he didn't get a degree, he doesn't have a PhD or master's or even a bachelor's, other than some honorary degrees. But I define him as very technical because he understands technology. He has spent the time to learn, understand, and go deep on technology. And so a person like that can absolutely come up with technical insights. I actually believe Bill has some amazing insights. And so earlier in his career. And so it depends on how you think of yourself as being a technical person. Today, as we live here, there is so much content available online. There is so much free information available that a person without a degree, without a qualification, can become very, very technical and expert in an area. And yes, they can absolutely come up with technical insights and start a company. So you don't need a degree to do that. That said, you do have to spend time educating yourself, whether you do it in a degree in a school or whether you do it, online, by looking at videos, reading content, etc. You can educate yourself in an amazing way. I mean, we just live at an amazing time from an education perspective. No question about it.
Um, what how do you acquire the technical insight? Is that like, oh, let's say I sit down and then I go on Coursera and then study every, computer science courses by engineering or like Stanford in general. And then after, 1,000 hours, I become this genius, have like a breakthrough and become a $1 billion founder? Or what's a pathway to getting technical insight?
Well, sometimes simply by reading, studying, etc., you can get some interesting
Mhm.
insight, and you can come up with some creative inspiration, a creative spark, and you can write. You could create something very interesting, but that is not enough to do a startup. That is
Mhm.
not enough to build a business. To build a business, to do a startup, you've got to pair that insight with a real world problem that people have, an opportunity that gets created because somebody is interested in that insight that you have now solved and now want to apply your technology to. So simply studying is not enough. In fact, I have often given a guest lecture at Stanford called Where Do Great Products Come From, where I emphasize that finding the problem is usually the harder part than finding the technical insight. There are
Mhm.
millions of technical insights which are completely useless from a startup perspective. They may be
Mhm.
valuable from an academic perspective, or they
Mhm.
may be interesting to the person who came up with it, but you're never going to build a business around them. To build a business,
Mhm.
you've got to understand a consumer, a business, a user, a company, an enterprise, a government that really wants to use your technology to solve something new in a better, faster, cheaper way. At the end of the day, there's only three categories you're going to fall into. Are you better? Are you faster? Are you cheaper at doing something? So have you created some new capability that people can do? And where does that knowledge come from? How do you find those problems? How do you become aware that you could apply this technology to find those
Mhm.
problems? That's a much harder problem to solve, and that usually comes from experience. That comes by actually engaging in the real world, by observing. Steve Jobs calls it connecting the dots, right? You have to go
Mhm.
and experience it yourself. As I mentioned earlier on, I grew up on a farm. My father used to say the best fertilizer is the dirt on your shoes. In other words, go out there and get your hands dirty, get your feet dirty, do the work yourself, and then you will come up with the idea. Then you will think of better ways of doing something. So I recommend it to every entrepreneur. Start getting your hands dirty as fast as possible. Go look for real world problems, and that is when you will get an insight on the basis of which you might, not guaranteed, you might be able to build a good company. There's many other steps involved in building a good company.
Mm. Let's I want to dig deeper into like get your hands dirty, right? Like let's say I'm a technical founder. I have a particular like advancement of a certain technology. Let's say use AI as an example. Let's say I'm building an AI company. I can do like a better version of ChatGPT. I'm just using this so like most people can understand, right? Like let's say I create a better version of ChatGPT or like some so basically I have a technical breakthrough. And how do I figure out like be who should I sell to, right? Like so let's say ChatGPT is already very popular among human in general. So like if I create like that, it's probably not gonna work. Let's say I like the speed is faster or like the answers are more accurate towards like each person's like personalization or whatever. I'm just making this up. So let's say I have like a significant advantage into the technology side of things. And I wanted to figure out who I should sell it to. Should I sell it to, um, the coders or like should I sell it to like the general consumer? Should I sell it to, people in a specific sector, for example, hospital or whatever? Like, how should I figure out who should I sell it to as a technical founder with this particular breakthrough of a specific technology?
Yes, this is the heart of the product management problem. This is the heart of the definition of what is really your product
Mm,
that you are going to build. A technical insight is just a technology. That doesn't make a product. A product is something that solves a particular problem at a particular price point, which is packaged in a particular way for
mhm,
a particular person. So that's how I define a product. And so you have to answer all those questions. How do you discover the answers to those questions? Is by getting your hands dirty, talking to potential customers, finding use cases for what you're doing. So to take your example, let's say I build a better chat GPT. The first question I would ask you is, how is it better? Is it, for example, faster? Today, ChatGPT is quite slow. If you actually
Mhm.
literally go and work with ChatGPT and you use it as an
Mhm.
API, it's extremely slow. Maybe you've made it faster. Okay, let's go find people where being faster is important. To whom is it important? It's probably not important if they have a human being in front of it, because
Mhm.
ChatGPT is fast enough for a human being, but it
Mhm.
is much more important for someone who's using it as an API, who's using it from a computer directly. So now let's go find people to whom the speed is very important and who are willing to pay more for it, who are willing to use it in a different way. Or
Mhm.
perhaps you have solved the problem of hallucinations. AI has this huge problem of hallucinations where
Mhm.
the AIs will make up an answer which is not true. In other words, they will lie to you on the
Mhm.
answer, right?
Mhm.
Perhaps you've solved hallucinations. Well, hallucinations are not so important if you are doing content generation, for mass media or maybe online or something like that. But perhaps you are using, Chat GPT or some form of, LLM, large language model over there, as a product where you have some life critical, mission critical type of decision which is being made, where a
Mhm.
hallucination can have a very bad effect on someone. Okay.
Mhm.
Well, there, clearly you would pay much more. You would be willing to put up with much more if you could solve hallucinations over there. So that's how you have to think like a product manager and say, what am I better at? And who really cares about this thing that I have become better at, that I
Mhm.
am able to solve with this technical insight that nobody else could solve over there?
Mhm.
So that's the way to think about it. I mean, I can give you a very simple example, which has nothing to do with software, nothing to do with computers. Let's just take an everyday example. All of us use batteries in our cell phone, in our laptop, and we are all dependent on batteries.
Mhm.
And today, the state of the art in batteries is lithium-ion batteries. And you can use cobalt. You can do, there's a few ways of doing it, but it's very well understood. The technology is extremely well understood. In fact, it is so well understood that the two most important products that we use batteries for today, namely our cell phone and our electric cars, which are massive consumers of batteries, right? The products are designed around the battery, because the limit of the design of the product is the battery itself. In other words, my phone would do more for me if it had a better battery. Imagine someone who could build a better battery. If someone had a technical insight where a battery had either longer life or less weight or smaller size or more capacity, that would be a very valuable technical insight.
Mhm.
So you have to think in terms of whose problem are you solving, in what way have you made it better, and then are they willing to pay for it, and how you're going to go, work with them on it. So
Mhm.
it
I
doesn't have
want
to be software. It can be hardware. It can
Mhm.
be many other ways of coming to it.
Mm. Is the CEO supposed to be the person talking to the customer, or like how do you even expose to the customer? Let's say if we're selling to, let's say, hospitals, and the CEO is a technical founder, and they probably going to hire someone who's non-technical to do the BD work to get in front of the hospital. But through that, how do you kind of like put together the product?
In the traditional definition of a startup and the traditional definition of how companies, especially larger companies, were run, the CEO was not the product manager. The CEO was not the person with the product vision. The CEO was considered more of an orchestrator. There was someone who led product, R&D, marketing, sales. They were functional separations.
Mm,
That started changing in the 80s with people like Steve Jobs, who, in my opinion, was one of the greatest product managers in the world.
mhm,
And obviously, he ran a very product centric, a very product oriented vision for
mhm,
Apple. And I think that is increasingly now the way in which the greatest companies are run.
mm,
So if you look at Facebook, Mark Zuckerberg is arguably the product leader of Facebook, Meta. In other words, the entire company,
mhm,
not just the Facebook product.
mhm,
And he's a very great product manager, and I think he will do extremely well because of that.
mhm,
Conversely, Google is run by Sundar, who is not a product visionary in this. I mean, even though he did work in product management at Google, the magic of Google's product management had already been accomplished when he joined Google. By the time he came to that company, he was not the original visionary. He was not the person who led that. And so I think the greatest Silicon Valley technology companies are the ones where the CEO is the product manager. And
mhm,
that is why that role is so difficult and so hard to fill and so valuable that I believe the product visionaries are underpaid when they are the CEOs. I mean, Elon Musk is probably a great current example of a product visionary who is also a great entrepreneur and CEO who is doing that.
Mm. I want to switch gear a little bit. Let's talk about like running engineering capital, right? Um, so you have learned a lot of great lessons from. You credit this to the foundation capital team, and I wonder what were the core lessons that you took to start your own fund, and when you were thinking about deal sourcing, picking, and winning, what do you think is your greatest strength?
I love those questions. So, indeed, I have been very fortunate. Very early in my career, I met Mike Chu, Catherine Gould, Bill Elmore, the folks, the older folks at Foundation Capital. Catherine was the founder, and she had a huge impact on my career. She taught me the business. I learned how to make money, how to invest, how to think about an investment very differently from her. I learned how venture capital works as an asset class. At the end of the day, we are money managers, investment managers, and venture capital is an asset class. I learned that from Bill Elmore. Bill was a co-founder of Foundation Capital, incredibly thoughtful about how he works on it, and he has been very generous in sharing and letting me learn from him. Similarly, I learned from Jim Anderson, who still is a mentor of mine, and I still talk with regularly about
Mhm.
how to manage a firm, how do partnerships work, what are the dynamics between people, etc. He's incredibly insightful about it. So I really do credit Jim and Bill and Catherine for some of the learnings that I got from them in
Mhm.
my journey over there. In terms of engineering capital, it's a little bit idiosyncratic. This is really engineering capital is the intersection of three very different things that just happen to come together at the same time. It is the intersection of where there was a market opportunity, there was a gap in the market, what I happen to be good at. Everybody's good at something. Everybody can't be good at everything. If I tried to play tennis, I would be horrible. Um, and what I really enjoy doing. What I enjoy doing is technology. At heart, I'm a nerd. Okay, I'm a nerd. I love doing technology for technology's sake, and I spend a lot of time on it. And so, engineering capital is really the intersection of these three things. Catherine helped me find that, and that's what I focus on, and that's where I spend time, doing it. In terms of the answer to your question of sourcing, picking, winning, and then finally exiting. Let's not forget the
Mhm.
most important
Yeah,
part,
yeah, yeah.
because we have to make money and return
Yeah.
capital at the end of the day. Um, I think you have to do, all of them at some level. You have to be good enough at all of those categories, otherwise you will fail. It's a package deal. When you are an investment manager, you have to be able to do all of those aspects of those things. But it all starts with sourcing. If you cannot source, then nothing else matters. Once you source, you have to be able to pick, because if you can't pick, then nothing else matters. So in some ways, it's like a funnel.
Mhm.
You kind of have to be able to do one to get to the next, which is why when young VCs, when people join a venture capital firm, I've brought in, I've mentored people and help people grow and become VCs and become investors. You try to start them out on the sourcing side, because that happens to be the natural flow of venture capital. That's just where
Mhm.
things start. And so if you can't source, then you're never going to be a great VC.
Mm.
Um, so I think you have to be able to do all of them. There really is no difference. It would be like asking, to take some sort of a sports analogy in playing tennis. Do you serve well, or do you hit shots well, or can you run around the court well if you're playing tennis? You have to do all of those things if you're going to win a game. You can't win the world championship unless you are amazing at all of those things. Still, everybody has strengths and weaknesses, but you've got to be great. You've got to be great at them. If you want a nerdy example, I just sent out my Engineers Week cards. I've got one lying right here if you think your audience would want to see that.
I would love to see that.
Let me pick it up right here. It's sitting right behind me on my desk. I wish I had thought of it earlier. But, last week 2 weeks ago was Engineers Week. Most people send out a New Year card. I
Mhm.
sent out I instead sent out a card to celebrate Engineers Week. And what you see on the card here is actually a bunch of code.
Mm.
This code actually generates, this
Oh
heart
my
symbol.
god.
Okay, if you execute it. And so that was my card this year, right? Now, who else but a nerd would think of something like this? Who would send out a card like this? But my audience enjoys it. They appreciate what I do, and it really, I think, describes how I work and what makes this so fun for me. Why this is so much fun. And then if you really enjoy something, then you tend to get better at it because you do it obsessively. You spend a lot of time on it. And I got to say, I'm a bit of a workaholic. I do get obsessive about some of my work.
I love the card, and I wonder from a portfolio construction perspective, are you the person who come up with the insight after reading a bunch of articles, or are you the person who plays the numbers game to go out there, chat with like 1,000 entrepreneur per year, and then figure out like kind of like program yourself to know the quote unquote right pitch? Like, are you like a selective person? I saw like, I mean, from my online stalking, I saw that you spoke at like AJ House or something. Like, obviously, I don't know. Like, are you like a selector? Like, let's say I just go to 50 events this year, but like they have to be like the most curated 50 events, or you go to like 1,000 events per year, like or like a chat with 1,000 entrepreneur in everything within the sector that you invest in, and then pick the right one. Which one are you?
I am much closer to the 50 than the 1,000, though I probably meet 1,000 people every year.
Mm,
I get a lot of inbound pitches and investments, and I do like to meet with entrepreneurs. So every day I meet one or two new entrepreneurs, new company. I'm always seeing new companies. So I'm constantly doing that. But that is not my approach. My approach is about quality, not quantity. It is about picking a few ideas, a few people, and really spending a high amount of time with them, helping them succeed, and making a bet in terms of the opportunity. And to make that happen, I spend a lot of time educating myself.
mm,
So if you look at my business card, on my business card, the title is chief engineer, which was sort of a fun title for a VC who's running a
mhm,
firm called Engineering Capital.
mhm,
My backup title. So when I was thinking about Engineering Capital, what should I call myself? Everybody calls themselves managing director or general partner. Or that's boring. Anybody can do that, or partner or whatever. So I came up with engineer as chief engineer, but I was brainstorming ideas. My backup idea for my own title was professional student. I think of myself as a professional student. My job is to study. I joined an AI reading group at the University of Toronto and started working in the AI track at the University of Toronto about 7 or 8 years ago, well before ChatGPT, well before all of this hype, started coming about, because I had an instinct that something will happen. I'm not an AI expert. I didn't study AI other than just one senior level course in my education. I didn't really study AI. My background is operating systems, very different from AI. But for the last 7, 8 years, I've been working on AI because it was clear that something interesting was happening, something would come about over there. And I started making investments in companies like Evinced and Robust Intelligence and Cognitos well before all of this hype came about, because I had done the work, I could see the opportunity. And when I met the entrepreneurs, it was their idea. It wasn't my idea. It was their idea. But when they came to me with the idea, it was clear to me what the potential was, how it could be applied. And I believe they also chose me because they had multiple offers, all of these CEOs. That one of the reasons they chose me is because I had a prepared mind. I
mm.
was ready. I understood the technology, and they felt I would be able to help them more than just some generic person who had a sales and marketing background, something
Mm.
like that.
Totally. I want to say hi to the audience. Hi, Chimai. Hi, Yanif. Okay, so we're gonna address your question at the end. So, couple questions there. Why don't we start with walking through one of your portfolios, maybe from like events? Like, how do you discover them, and then how do you like have the conviction to invest in them?
Yeah, so Evinced was started by two folks, Naveen Thadani and Gal Moav, who came from Oracle. And in their case, they were introduced to me by a friend. That is probably how more than two-thirds of my investments come from. There's a friend of mine who calls me up or sends me an email and says, hey, so-and-so is thinking of starting a company. Would you like to chat with them? And depending on who the reference is from and what the area is, I'll either take a meeting or not. In this case, I decided to take a meeting, and it was clear to me that they had an amazing idea. They were going after an amazing problem. The observation they had was that the world needs accessibility. If you solve accessibility in a way that regular people who don't have special needs, can use the technology, it would be a massive market, and they were going to use AI to do it. And I
Mm.
was like, wow, that's brilliant. And I was happy to lead around after my diligence, after doing the work. I was the first and only investor. I led a pre-seed round in the company. And initially, it was hard going because nobody else would believe what I believed. People would say, well, people with special needs, that's a small market. It's never going to be a big market. We're really not interested in this company. And we had, it took us a while to raise money after that. But now it's like, the company's exploding. Right now, we have the technology working. There's lots of people chasing us. We have a partnership with Microsoft. Insight led the Series B in the company. And it's very obvious. We have multi-million-dollar customers. It's very obvious that we have created a new category. So what is our category? What have we solved? What did we do at Evinced? The magic insight that Naveen had is, are you familiar with closed captioning, like on a TV, where you can see, in text what somebody is saying? This is a feature which has existed for a long time in TVs, right? You turn it on. For people who are hearing impaired,
Mm.
they can just read what's at the bottom of the screen. Guess what? Most people who use closed captioning are not hearing impaired. They are using it because it happens to be convenient in the moment, because maybe it's a noisy day, the children are making a racket, they want to listen to the news or see the score on a game. They turn it on, or they're in an airport and maybe the closed captioning is running below the screen, and they can just read the headlines as they're going along. So a feature, closed captioning, which started only for people who had special needs, is today being used by everyone because it's so easy to use, it's so well designed, it's integrated into all TVs. You just have to press a button and you can see it. I mean, YouTube has it. Everybody has copied this feature now, and everybody has it. Imagine the same thing for your entire applications on the web and on the mobile phone. That is
Mm.
what Evinced is doing, and we are doing it with AI. So
Mm.
it's a very advanced company. It's a very interesting technology, and it is a great example of taking a technical insight, solving a business problem, and applying it to a massive market. So I'm very excited about the opportunity for the company.
How did you do due diligence on that? Because I think, like you mentioned, right? Like, so being having a really magical insight on the technology side is one thing, but on the other hand, we have to develop like a product and there's go to market and everything. How do you examine the ability of a technical founder to execute on the go to market side?
Wow, that is such a nice question, Grace, because it is so hard to do that. It's highly subjective. It's difficult to do it, especially at the stage at which I invest, which is when there is no revenue and often there is no product. So I'm almost always the first investor in my companies. They have zero revenues when I invest. They might have started building a product, maybe they haven't. And so you can't just call customer references and get an answer of, why are they going to buy and how much are they going to pay. So we have to depend on indirect signals to do that type of diligence. I spend a lot of time with customers, just like I said earlier, that entrepreneurs, CEOs should get their hands dirty talking to customers. I get my hands dirty as a VC talking to customers all the time. I will literally take them out for dinner, go sit down with them, talk to them, and say, okay, what are you doing? Why are you doing it this way? What would make you happier? And I'm always listening for the gaps. I'm always listening for what did they not say? What is missing from what they are thinking about, and what could fill that gap. So that's what I call the prepared mind. So you've
Mhm.
got to have that information in the background to see what's possible. I'm doing the same thing on the technology side. And then you try and put all of this information together. Of course, you do reference checks, you make reference calls, you study their business plan, you study their financials, you take all this information together, and inevitably there's contradictory information. Something is right, something is wrong, something is good, something is bad. There's no perfect deal. There's no perfect opportunity. There's no perfect person. There's no perfect company. So you just have to, take all of that information, and then you have to apply judgment. You have to
Mhm.
take this information, and then you have to apply experience. You have to apply judgment, instinct, and say, is this going to work? Is this really going to happen? That's the investor instinct. That's the judgment call that I make. Oftentimes I'm wrong. I mean, I have made many investments which didn't work out. And so that's okay. But one of the luxuries and the fortunes of the venture business is that we only have to be right a few number of times. We don't have to
Mhm.
always be right.
Mm.
So I do have that in my favor. But I am not a spray and pray investor. I don't write a lot of small checks, wait for them to do better, and then try and put more money into those companies. I am not a spray and pray investor. I am a
Mm.
high conviction investor who does all the work up front, spends all the time to really build a partnership with the CEO and tell him or her that, look, we're going to work on this together. I mean,
Mhm.
Diane Yu, she was the founder of one of my previous companies, Freewheel. She was the CTO. She came to me and said, for a while, she was living in China. Then she came back and said, hey, I want to start a new company. And I said,
Mhm.
don't tell me what you're doing. I want to invest. And she started laughing,
Mhm.
right? She was like, you don't even know what I'm doing. And I said, but I know you. I've seen you work. I know how special you are. Now, in reality, of course, it took about 6 months, I think, from that first conversation to when I finally invested. But I think she's building an amazing company in the fintech space. So that's how my work goes on. It can be weeks and months of work with the CEO before an investment gets made.
I have a couple questions there. So it sounds like the CO that you've invested in are industry veterans. Like, so basically they have proven track record in somewhere before they started the company. Let's say if my as like you okay, so since I'm like younger, so I like the people that around me may not have exit a company before, or like even they have exit company before, that's like really tough to invest in. But anyway, so let's say if you invest in the younger crowd who are, let's say, machine learning PhDs at top universities, um, are these going to be good investments or not? Or like, is this a numbers game? Or like, how do you develop conviction without seeing their track record? Like you mentioned, like you invest in a person because of like you have seen how she worked before, but from a friend perspective or like from a VC who just met the entrepreneur, it's really hard to tell. Like, besides maybe you had just asked around, like, what is it like to work with this person? And, it's all like third party knowledge. That's not you can't really work with everybody, right? Maybe at your position when you left VMware, you have already built up a network of people that you have worked with or people who like a secondary connection that kind of like someone who can vouch for them and you trust that person. But let's say if you're younger and then this younger crowd that doesn't have any track record, how do you pick who is the winner?
Invest Entrepreneurs come in all types. There are entrepreneurs who are experienced, who are veterans. There are entrepreneurs who are early in their career, who have come straight from school. And I invest in both types of entrepreneurs. So, for example, there's a company called Netsil that was started by Harjot. He was a PhD student at UPenn, and he started the company. I became the first investor. We built an interesting business. The company was acquired by Nutanix, and I made a very nice return on that money. He came straight from school. He had never held a job before he started that company. Currently, in my portfolio, I have investments in Kipo Parts, started by an entrepreneur who was only a couple of years out of Stanford. I have another company called High Score, where Ian had come from Dartmouth. He had done a job before for a few years. He had tried doing a startup, which didn't really work out. I'm the first investor in that company. I've just invested in Collinear.ai. She's a PhD from UT Austin and relatively early in her career, very young, but I believe she's solving a very interesting problem. and has the right DNA and the right approach. And so I'm very proud to be an investor. So I invest all the time in founders who are early and young in their career. Remember, when I invested in Diane's previous company, I was also the investor there, and she had not done a company before. So, that's just the nature of how this business works. There is definitely an age, sort of preference is a skew in how the age works. I mean, more companies are started by younger people. It's a tough business. It's hard to start a company. It's high risk, high work, difficult job to do. And so it helps to be a younger. Of course, experience helps. So I'm also happy to invest in experienced founders. How do you look for them? Again, it comes back to a subjective judgment, a subjective opinion about whether is this person motivated by the right motivations? Are they truly ambitious? Do they have the right set of skills and the right approach that I believe they could become a great CEO and that they will start, a big and large company? I can talk about some of the attributes that I consider very important in entrepreneurs at
Um,
that stage.
I wonder, can you talk about due diligence process on these attributes? Like, because I think like most people would say the attribute would be, let's say, if you're a technical founder, also, are you good at sales? Like, can the technical founder sell? That's like a lot of the like a lot of VCs say. Like, I mean, I would love to hear your criterias, and then I also want to know like what are the questions that you would ask, and how do you diligence those characters?
All diligence reduces to basically three types of work.
Yeah.
You are either doing reference calls, you're talking to someone about it. You are either meeting with them in person. In other words, I am evaluating someone and looking at, what they're doing and how they're doing it. Or I am reading something that was written offline. Perhaps I'm researching a competitor. Perhaps I'm studying a technology or reading their business plan, whatever. So all diligence reduces to one of those three activities. I do it all myself. Unlike some big firms, I don't outsource it to an associate or a vice president or some junior person in the firm. I don't write investment memos. I do all the work myself. I bring all the information in myself. And at the end of the day, it's my judgment. I am the investment committee. It's my judgment on whether this person will be able to do this work or not, whether this will be successful as a CEO, as an entrepreneur. I have hired thousands of people in my life. I've fired a few people in my life. I've made mistakes, but I've also been successful in hiring people. And that is what I'm bringing to investing. That is that instinct and judgment that I'm bringing to it. I don't have a formal checkbox criteria of saying, does this person have a degree from Harvard? Does this person have a PhD? No, I've invested in people who don't have that. But I've also invested in people who also have PhDs from Berkeley and Harvard and Stanford, those things. So it's a question of looking at the package and saying, does this work? The analogy you have to keep in mind, Grace, is think about an aeroplane. An aeroplane obviously flies. That's why it's an aeroplane. If you were to take the separate parts of an aeroplane, none of them will fly. You can't take the wheels and make it fly. You can't take the engine and make it fly. You can't take the wings and make it fly. They will not fly. It's only when they are put together in that particular form and particular shape does it suddenly become to fly. And what I'm looking for is an entrepreneur, a human being, a person who wants to fly, who has the desire and the skill and the ambition to say that I am going to be the next Steve Jobs, the next Mark Zuckerberg, the next Larry Page. That's what I want to do.
Let's talk about, you mentioned three things, right? Like you would do reference call, meeting them in person, reading something. So let's say for example, if someone is selling something to let's say if they list SpaceX as their client, or like for example that caliber of things. Let's say I don't know anybody at SpaceX. How do I do the diligence to do the reference call? And yeah, like I mean I have other questions, but like let's start with it.
Well, my job as a VC is to know the right people
At
to
SpaceX.
get to them. So I'm very proud of my network. I have only worked in Silicon Valley, even though I grew up in India. All my work has been within a few miles of Silicon Valley, right here in the magic of this environment. And so I've built up a network. And usually I can get to someone directly, and if not directly, I can get to them indirectly, within one sort of level of indirection, I can get to them. And again, remember, at the stage at which I'm investing and the questions I'm trying to answer, I don't have to meet a specific person. I'm not making a bet on some contact at SpaceX or whatever your example is over there. I'm making a bet that the company will be able to build a business, that this is a good investment, and the company will be able to build a business. Usually, you can get that question answered by coming at it from different directions. Again, it's only a high level of conviction I'm building. I don't have a guarantee. Nobody will guarantee that the business will be built. I'm building conviction, I'm building a vision that this can be built, and you can usually do that with diligence. What I tell people is, if there is something which is mysterious to you, something that you don't understand,
Mhm.
which you really feel is unusual, just go and meet 10 people who work in that space and have a cup of coffee with them. Somehow, somewhere, somehow have a conversation, and you will start getting an insight. You will start understanding how that business works, how those people work. It only takes 10 meetings to start building up a sense of, some sense of what it is.
Let's say using that same example, who are the 10 people you would call? Let's say the person installing, I don't know, a rocket to SpaceX. And like, what are the 10 people you're going to call? Is that, let's say, an engineer at NASA or like what? Like, who are qualified to be that 10 people? And how would you reach them? Is that like from LinkedIn Code DM, or obviously you have a network? Like, I guess, how would you kind of like engineer this network of people you're going to get information from, and what information you're going to get to vet if this so worth your time and investment?
Yeah, so for every investment, I'm trying to answer a few questions. I'm trying to answer some questions about the individual themselves and their characteristics, their attributes, etc. Those types of learnings come from past workers, from people who they have worked with in the past, perhaps their friends, perhaps their roommate, someone who can talk to them about them as an individual, about a human being, independent of the idea. And, I mean, if you just think back to your high school class, you went to high
Mhm.
school, you had a class, there were friends, you knew a bunch of people. Some of them were your friends. There were other people who were not your friends,
Mhm.
but you still have an opinion. Is that person lazy? Is that person intelligent? Is that person hardworking? You have an opinion about that person because that's in human nature. It's in our
Mhm.
nature to have an opinion about other people. So first,
Mhm.
I'm looking for the attributes, and I try to call people who know that person better than me. And if it is an introduction by someone, that's always the first person I want to call because they are the person who are introducing them to me. And that's why warm intros are so important in the venture capital business. Who introduces you? What do they say about you is so important. The second person I always want to call, a second set of people I always want to call, are people who are potential buyers of the product, people who will actually write a check for that product. You've got to talk to people like that because it's very easy, especially for entrepreneurs, to convince themselves that the world needs this, that there is a demand for it.
Mhm.
But that doesn't mean people are willing to pay for it.
Mhm.
And so you have to close the loop. So that's the second set that you want to call. The third set that I like to call always is the alternative. Sometimes people call it competition, but I like to call it the alternative because rarely is there direct head to head competition at the seed stage in terms of what you're doing. So, what are people doing today? How are they solving this problem today? What's in their mind? What do they do? How do they think about the problem? That's part of having a prepared mind, but it's part of doing diligence over there. Um, and then finally, I like to meet the team. I like to meet the other members of the team. So the same person with the same attributes and the same skills, same education, same business plan may not work in one team and may work very well in a different team. So I want to meet the co-founder. I want to meet the employees that the person has hired. If they've hired, sometimes they've hired 2, 3, 4 people by the time I'm investing. I want to get a sense for, is this internally consistent team, or are they going to start fighting 6 months from now? You want to get some alignment. You want to see some consistency in their attribute. So that's how I approach diligence. I believe the one word every VC and every entrepreneur should think about when they are evaluating themselves or an idea is consistency. Are they internally consistent? Are they doing things which make sense and mesh with each other? Not just independently good, but with each other.
Let's say if you're doing diligence of their team, Do you ask for introduction from them, or like do you like go through LinkedIn and be like, "Hey, want to grab coffee separately so you can tell me how shit your boss is," or something? Like how I guess like how do you go about actually executing on this? Same as like the buyer or something. Let's say if you're doing diligence at like a Series B company or something, like people are trading it more seriously because there's a lot of money involved. And if it's like a pre-seed company, even their clients could just change like tomorrow. And how do you do that? Like, number one, it's like if I'm writing a small check and then to a company, and then they may just not treat me seriously. Like maybe they will just be like, okay, so I don't really know if you're gonna invest, and then like, why would I waste so much of my time to introduce you to my clients that I finally closed? And what if they say something bad? But anyway, so how do you kind of like actually executing based on this?
So fortunately, I have the luxury now that they do take me seriously because
Of
I'm
course.
usually
Yeah.
a substantial amount of the round. So I don't have any issues in terms of them giving me references. And there are on list references. In other words, the list that they give of people, customers, etc. I can talk to.
Mhm.
And then there are off list references. In other words, people that I'm going to go talk to who are not on their list, but I want to get some sense on about them before I make an investment decision. And you have to do both to be, to do your diligence, to be prudent, to learn about them. You want to get that information from both sides.
Mm. In terms of
But
fund
Grace,
building.
you sorry, just to complete that answer, you also have to remember that there is no such thing as complete diligence. At
Yeah.
the end of the day, we trust the entrepreneurs and we take risk. And one of the reasons why Silicon Valley is so successful is because it is, generally speaking, a high trust environment. You can reach people, you can talk to them, you can get a good level of trust, and then the rest just works because it is based on trust. So that is something which, if we lose that, I think it's a huge competitive advantage we have here. And if we lose that, then it will not work. Silicon Valley will not work. And that's why you get frauds like, FTX or Theranos, Elizabeth Holmes, etc. Those types of things can happen. That's the danger of that problem. But those are few and far between. Those are rare. They don't happen that often.
Mm. Um, let's talk about exiting. So as a founder, you have to exit. You have to make money. Uh, what's your thought process on like, vetting a deal? Like, how do you like quickly picture how they're gonna be invest by the next, like who are gonna be the next round of investor? Do you make investor intro, or like do you, let's say, talk to a Series A investor before you put money into this particular deal? Uh, what's your thought process on exiting?
I don't talk to Series A investors before I make an investment decision. I make an independent investment decision based on my own work and research.
Mhm.
Um, However, I definitely think in the back of my head about who will be the Series A investor, who will lead the round, what type of firms will capital be there or not, because that is part of the risk profile of the company. In other words, does this company have capital risk or not in terms of how they are raising? But I also don't think of Series A as an exit. An exit for me is usually 7, 8, 10 years from now, hopefully when the company either goes public or gets acquired for a massive amount of money. That's a successful exit. Obviously, most companies don't get there. There's a lot of things which happen along the way. But most of the time, when I'm investing in a company, I am starting a journey with the assumption, with the hope and expectation that it's going to be a long journey, 7, 8, 10 years before we will see money coming back. If it turns out that that's not the case, company gets into trouble, something doesn't work out, whatever, then you help them exit. Then I call my friends at various companies. We try to get an M&A going. We try to get an exit going. And just like any good VC, I work hard on that to help my CEOs. But that's not the primary job of an exit. The primary job is to build a big company, to build a category leading company.
Um, I'm literally taking notes. What are some characters that you feel like makes a character leading, like, or basically like category leading company?
What is the character of the individual or of the company itself?
Both.
Okay, so for the individual, I think it's been studied very well. right? So these are people who are iconoclasts, they are leaders, they are highly ambitious, they are highly intelligent. They may or may not be educated, but they are very intelligent, they are self-starting, they are disciplined, and they want to make an impact. They want to leave their mark on the world. And so those are the kind of people who build those companies and go over there. They are not afraid to take risks. They are not afraid to, quote unquote, fight, not physically, but emotionally, mentally, psychologically with the market, with the people, because they're doing something different when they take it on. In terms of the company, in my portfolio, they all have some technical insight, some core technology that we feel is fundamental and can result in a category being built. That is obviously not necessary. There are many companies that are built successfully which don't have that. But in my case, that's always the case, that they have some technical advantage, some unfair benefit coming from a technology that they hope to control. Then, second attribute, they are in a large market. You cannot be a large company unless you are in a large market.
Mhm.
A company is limited by its market size. So they have to be in a large market. Third, it has to be a fast moving market. It is not enough to be in a large market that moves slowly. We are a startup. We want to get in and get out in 7, 8, 9, 10 years. That is relatively speaking fast relative to how the world works. So there are categories. For example, edtech is a famously slow category. Government is a famously slow category. They are large businesses, but they are slow moving. And so they are hard for VCs to invest in, for me to invest in over there. Those are the attributes you look for when you believe that you can build a category creating company.
What's your vision for your fund?
My hope for engineering capital is to be the best firm for founders to start their company with. I believe there are some amazing firms, firms like Benchmark and Sequoia and Excel and Greylock, which are great for the long journey, for building them. But I believe I am building the firm that for technical founders, based on a technical insight, I am the best firm in the world to start your company with.
Um, what does it look like running your fund from an operational level? Because, people always glamorize like, the investing process, which is very fun. But like on the other hand, there's like half of the work is managing a fund, raising money for the fund, the back office, uh, everything. So what does the day-to-day look like for you?
Yeah, fortunately for me, Engineering Capital is a very simple firm. So I'm a solo GP, so I don't have to deal with any of the overhead of managing a partnership, dealing with sort of people issues, all of those sides of it. I'm managing 4 funds. All 4 funds were oversubscribed every single time that I have closed. So I've had, knock on wood, I've been incredibly lucky in terms of, having a waiting list of LPs who wanted to invest. So fundraising has not been an issue. So really, all my time is spent on running the firm, running the fund, which is making new investments and doing the managing and helping your existing companies. The back office is entirely outsourced. I don't run my back office, so it's entirely outsourced. There's lots of firms which do it now because there's been such an increase in the number of venture firms. And so from my perspective, it's just totally automated. It's completely done by sort of by people. It's not automated. It's the human beings who are working there. But there are lots of good firms which do this work on an outsourced basis. And so it's really very simple. My time is spent on looking at new opportunities and helping my existing portfolio. That's where I spend probably 95% of my time, is just those two activities.
What do you need help with? What do you consider as like the biggest challenge right now for you?
The biggest constraint for me, I don't know if challenge is the right word. The biggest constraint for me is just how much I can read and how much I can learn and how many entrepreneurs I can meet, because there is an endless, number of companies that are coming in every day. I mean, just while I'm on this call with you, I'm sure that when I go back, there's going to be a bunch of emails from people, who want to meet and who've got companies that they want to see. And at the same time, there's an endless number of papers coming out of Berkeley and Stanford and Harvard and Toronto, with the latest research, on AI, on cybersecurity, on data, on, sort of systems. papers, and there's only so many conferences I can attend. There's only so many meetings and seminars I can go and listen to. And so I'm just trying to balance those two things and spend my time on it. I'm at a stage in my life and career where I'm very fortunate. I'm obviously further along. I'm in mid stage, in my career, where I feel like I'm at a very steady balance. I'm not trying to increase. I'm not trying to decrease. I'm at a steady balance, and I'm just trying to take both those sides and do the absolute maximum I can within that constraint.
Mm. I want to end with a 1 minute fire round. I don't know if you have a couple minutes. Okay.
Sure.
What's your favorite book?
For entrepreneurs, it's a book called Undaunted Courage by Stephen Ambrose. It's the story of the Lewis and Clark expedition, the first white men to walk across the North American continent. I think it is a great story in how entrepreneurs should think. You can read that book. I mean, it's a 200-year. It's a book about a 200-year-old story, but you can read that book and imagine and the decisions that they had to make. And that is how I believe an entrepreneur should think about it. How many people should I take with me? What kind of food do I carry? How many clothes should I take? What's the kind of people that I need to hire for my team? All of these decisions Captain Lewis talks about.
Mm. Who made the biggest impact in your career?
Undoubtedly, Catherine Gould, who was the founder of Foundation. She helped me start Engineering Capital. She taught me how the venture capital business works, and has been, I literally owe my career to her. So just had a huge impact on me.
Mm. Who would you invite to your dinner party?
Oh, I have a long list of people that I would love to talk to. If I could go back in history, I would love to invite George Doriot, the person who started the very first venture capital firm in the world.
Mm. Mm.
I would love to invite Steve Jobs. I would love to have a dinner with Gandhi. How did he motivate people to take on the biggest empire in the world with no money, no army, no politics, nothing? So there's lots of very interesting people who I would love to go chat with. But I would probably end with Alan Turing, who is a personal. You can probably see his photo back there. It's one of the gifts that my children gave me. That dot matrix picture is of Alan Turing, who was really the father of computer science.
Where can we find you outside of work? Besides Mountain Everest or Everest? I
Uh,
heard you
I
climb
am
these.
definitely a workaholic, so you will find me at work a lot of the time, and I do like the outdoors. So I don't get to go to Mount Everest anymore. Those are big expeditions. It takes a lot of prep and a lot of time, which I don't have anymore. So I make up for doing that by just going to Tahoe, skiing. I love to ski, going hiking. I take my children camping every summer. So little activities like that. It's just a weekend of camping. You're in nature, away from everything. The phones are off. There's no electricity. You're in a tent. You're cooking food on a fire. I mean, that's what I love doing.
That's so sweet. That's such a great picture to end with the conversation. Thank you so much, Ashmeet, for coming on the show today.
It's been a pleasure. Thank you for inviting me.
Let me